Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Really, it's all about the Iranian conflict. Now, that's obviously had a major impact on global markets, most noticeably oil. Now, what is quite interesting, because if you remember back in 2025, the US bombed the Iranian nuclear capabilities, and Trump came out and said that it obliterated their nuclear capacity. Now, you fast forward sort of 3 to 4 months down the road, and supposedly Trump then had a feeling that Iran was about to launch a nuclear attack against the US, and that's why he started the bombing campaign. So many are asking, well, hold on a minute, if you obliterated their capabilities back in 2025, how come sort of 4 months down the road they've got the ability to be able to launch a nuclear strike again? Now, also as well, many of the Arab Middle Eastern countries are now suffering the consequences and being bombed because of Trump's actions against Iran. And that obviously has consequences for supposedly the trillions of dollars that many of these countries were looking at investing in the US that Trump was bragging about over the last couple of months. Now, what it does do as well is make it very difficult for Trump to claim about he's bringing down gasoline prices in the US because they've risen quite dramatically over the last sort of week because of the conflict and the rising oil prices. But what it has done is obviously has taken the Epstein files off the front pages. And also the state of the US economy, the latest jobs report was really pretty weak. Inflation is obviously rising, will look to increase further as oil prices start to hit home. And potentially that could pose a little bit of a problem for Kevin Warsh when he takes over the Fed in May. Because Trump has been pushing for lower interest rates, but with rising inflation and weakening the economy, it's going to be pretty hard for Warsh to come in on sort of day one and look to sort of promote lower rates when you've got an inflation rate that's running above 3%. Now, obviously, the Fed will be keeping a close eye on the inflation, but really it's been caused by supply and the disruption to the global oil supply. And so raising interest rates will not bring down the price of oil. And consumers in the economy will already be suffering because they'll be paying the higher prices for the fuel. So once again, with the US consumer that's suffering, and that really doesn't bode well with the midterms coming up in November. Now, interest rates in the US have started to creep a little bit higher. That 10 years back at 412, the 30 years 475, and the 2 years back at 384. Now, they're around sort of 15 odd basis points higher than they were this time last week. Now, interestingly, Trump has come out and said that the war in Iran now is very close to ending. The US is sort of very close to victory, but again, without any real evidence to back up that statement. Now, in other news, Trump has finally fired Kristi Noem from the Department of Homeland Security. And also potentially Trump's meeting with Xi Jinping in China is now in question because of his actions in Iran. Now, as stated, obviously oil has been very volatile out there. Beginning of the month of March, it was trading around sort of $60. It got up to a high as just below 120 and is currently back around $80. And the reason for the fall is, potentially the ability for ships to be able to travel through the Straits of Hormuz. Now, if that is the case, then the global supply chain is not too badly disrupted, but has yet to see real evidence of that taking place. Now, in the UK, it would appear they've softened their stance a little bit and allowing the US to use some of their air bases. But certainly the rising oil prices will not be helping the Bank of England that really does need to be cutting interest rates. Now the EU as well, obviously they've now got sort of two conflicts in their sort of vicinity. You've still got the Russia-Ukraine, which is now entering its 5th year. And then obviously got the Middle East action as well. And it's really just a question of how long that this Iranian conflict lasts. Because if it does drag on for sort of 2 to 3 months, that starts to head into the European summer months. And that obviously has major implications for airlines. Now in Australia, a little bit of better news on the GDP that came out for the December quarter as plus 0.8, which was slightly stronger than expected. Now here in New Zealand, obviously a little bit of better news on the housing front in terms of affordabilities with the sort of falling interest rates and house prices sort of relatively stagnant. The house price affordability is to one of its best levels for the last sort of 10 years. But then obviously New Zealand is still impacted by the ongoing oil issues. We've seen gasoline prices rise by around 10% over the last week. Now again, there has been some talk in the press about the possibility of the Reserve Bank having to raise interest rates because of the inflation impact of the oil price. But that's a supply side issue, and really raising interest rates doesn't do anything to bring down the price of oil. But as discussed previously, the consumer is already impacted by the increase in the oil price, by the rising price at the pumps. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.